health is something very important. So what happens when we're sick or we're injured, we're dealing with a major health issue? So I think living benefit is very important. You may not think about it today because you don't need it. Yeah. But it's really nice to know that you have that protection just in case. I'll be bringing each week a different guest with all the answers that you have the questions for. And this way you can come back to my podcast for any questions that come to your mind, and you can focus just on working, as everything else this podcast will provide you. Hi, and welcome to Simple Wealth Wisdom Podcast. I'm your host, Gakhar. My work helping successful business owners and professionals like you build and maintain your lifestyle and legacy exposes me to many very interesting specialists in tax, accounting, law, estates, and investment side. In this podcast, I share those people with you and your team so you can hear directly from them. So, if you are a successful business owner or self-employed professional, stay tuned for a lot of business building value. Today, I'm again very excited to have my dear friend Vanessa from Manulife as my guest. Welcome, Vanessa.
Thank you so much for having me.
Well, you're very welcome. Vanessa is a living benefits specialist at Manulife. She comes with more than 23 years of experience and knowledge, and she works around solving challenges and securing protection in the event of a failure of health. Wow, everyone needs that. She's known for sharing her unique ideas with advisors like me, and she helps my clients protect themselves using living benefits protection. As everyone says, health is your wealth. Vanessa comes in front and says, let's talk about protecting it. If it is that important, let's protect it. So Vanessa, today we're going to be talking about living benefits. We've talked about death benefit many times on my podcast. As you know, most of my viewers are business owners and self-employed professionals. And of course, for them, health is something very important. It's for everybody, whether you are a professional or a business owner, health is important for everyone. But because they're self-employed, because they are their own bosses, for them to be physically fit, to be able to do what they're doing and continue doing it again, more than important. So let's start with something very simple for them to understand. What is living benefit?
Sure. And it's a great question because I think often it's misunderstood. As you mentioned, we all sort of understand about life insurance and what happens if we pass away.
Yeah.
And that is kind of like death and taxes. It's an eventuality for everyone.
And we're talking about it all day.
Absolutely. However, living benefits really just talks about what happens while we're living. So what happens when we're sick or we're injured, we're dealing with a major health issue? What happens when we can't use our life insurance? Not yet, which is a good sign. But what happens, what protection is available for us in the event that we're just dealing with a major health issue? Yeah. That's where living benefit policies come in and provide some cash, provide some relief to your clients.
So that means living benefit and death benefit both are insurance, just for my viewers, but one is paid out on death and living benefit is paid out when you're alive.
Absolutely.
So living benefit, can you just tell us what are the living benefits? What kind of living benefit are there?
Sure. There's really kind of three main ones. So one is what we call disability insurance, or sometimes called income replacement.
Yeah.
So if you are sick or injured and you're unable to go to work, either full-time or part-time, or maybe you're losing some income in your business as a business owner, then you get a monthly check. And that's really designed to replace your income.
Replace your income. Absolutely.
There's also critical illness. Now, critical illness sounds a little scary, but what this really does is this is a lump sum payment as compared to a monthly payment.
Tax-free.
Tax-free. When you're diagnosed with a scary condition, something like cancer or heart attack or a number of diseases that are quite difficult.
Right.
And then the last one out there is what we call long-term care. Now, I think when we say long-term care, we think about long-term care facilities.
Right.
Because that's usually what's in the media.
Yeah.
And it certainly could be a long-term care facility is where you get assistance. But really, long-term care just says you need assistance every day with what we call the 2 of 6 activities of daily living.
Yeah.
And an easy way of remembering that, so if you can sort of understand when long-term care comes active, is when you can't do maybe the first 6 things you did for yourself this morning.
Yeah. Bathing, going to the washroom.
Yeah. I've actually got a really easy way to remember it and to simplify it. So, Sim, I bet you did this plus or minus in this order this morning, but correct me if I'm wrong. You got out of bed.
Yeah.
Probably went to the washroom.
Yes.
Jumped in the shower.
Yes.
And obviously got dressed in this beautiful dress.
Thank you. Yes.
And then you probably had some brekkie.
yeah.
And then you maintained continence while you did so, or you would have to start some of that process again.
Absolutely.
So long-term care is only activated when someone can't do 2 of those 6 items that we do for ourselves. And then whether you're getting care at home or in a facility, there's a monthly payment to assist with those costs.
Right.
So those are really the 3 different kinds of living benefit solutions or choices that any of your clients can choose to add into their portfolios.
So that becomes very interesting if somebody's a self-employed, as a business owner, professional, you're self-employed, you are, diagnosed, people get diagnosed any day, you never know. There's so many people diagnosed every day for different kinds of problems. If you get a critical illness or you met with an accident, you can't come to your work the next day, or you're old and now you're on your own and then you can't get up from your bed in the morning to go to the washroom or take a shower. All these things are covered by living benefits.
Yes.
And living benefits, they have to buy these kinds of insurance separately to protect. As you've said it very rightly, that people protect their homes if the house burns. People protect their cars if they meet into an accident. But this is the biggest thing.
Yeah, it's interesting because we always think about protecting our physical assets, the homes, the cars, the jewelry, whatever. And while those things are important to us.
But who made them? Who got them?
Exactly.
Yeah.
And how do you get them and keep them? For most of your business owners, it's because they go to their business and they produce and they work and they generate the income that allows them to pay the mortgage or pay the car lease or whatever it might be. And I think sometimes we discount how important we are to our things. We look at our things and we don't realize that the biggest item we have to protect is not just the car, but it's us.
It's us. I am a business owner.
Yes.
I am a self-employed professional. I'm both. So I fit into both the shoes. And I really feel if tomorrow, for any reason, I'm not able to come and be in front of my clients, there's no way my show is going to run because everyone looks up to me. I'm the one who's talking to the client. I'm the one who made those promises that, okay, we'll do this with the planning. And if I don't protect myself, how do I live my life? How does the show goes? How does the mortgage? There's so many things. So I think living benefit is very important and very especially for self-employed people. Now, you know that my business owners and self-employed professionals, do you think they should have living benefits protection? If yes, then why should they have it? I know protecting yourself personally and protecting yourself corporately, 2 different things. So why should they have it?
Well, a resounding yes. And I would say that a business owner and a professional is actually more at risk than someone who's an employee. So I'm an employee.
Yeah.
And I'll make the distinction here that as an employee, if I was away from my job for a period of time,
right.
1, my employer legally has to keep my job open for me. I may have employer benefits that provide me some of those items. And as an employee, I've probably been paying into some government benefits packages as well.
Right.
A self-employed person typically doesn't have that protection there for them. So if you don't show up for work, there's people who are dependent on you, not just your clients, but your staff.
Yeah.
And if you're not here and you're not driving the business the way that you do, the way that any of our business owners do, then all of a sudden, when you come back to your business, your business may not look the same. It may have been damaged by your absence. You might have to almost start from beginning.
Right.
And what we often also see, which is really, it's detrimental for the business owner, is because this is your baby, right? Your business is your baby. I
always call it your baby. Yeah, I always.
You sometimes rush back too soon.
Right.
So you actually hurt yourself by not doing a full recovery because, again, this entity you need to take care of.
Yeah.
So
it's
protecting your baby and protecting yourself all at the same time.
So, we've talked about on my podcast many times about self-employed professionals and business owners buying insurance, buy, sell, buying, key man insurance, but we always talked on the life side.
Yes.
And today we're talking about the critical illness, living benefit size. So I want to say, if you can just give an example to my viewers about what happens, let's say somebody is diagnosed with a heart attack or somebody is diagnosed with a cancer, critical illness defined cancer, and the benefit is paid to the corporation or benefit is paid personally. If you want to just explain a little bit by an example.
Sure. So really one of the nice things is your business owners actually have the decision. They can decide if they want the money to go into the company or to them personally. So that's usually a decision that they make when they are first deciding to install one of these plans.
Right.
But if they have it held corporately, and we see a lot of business owners who want to use their corporate dollars, because traditionally there's a little bit of a tax break between corporate dollars.
Cheaper dollars, yeah.
So if you have your company being protected by a critical illness policy, then those dollars would flow into your company like profit. Right. So you might have talked in the past that life insurance proceeds can sometimes go through something called a capital dividend account. So unfortunately or fortunately, living benefits, living are not life insurance. So those dollars come in like pure profit. So again, think about yourself. If you were dealing with a major health issue and your business now had profit of $250,000, $500,000, $50,000, doesn't matter what the number is, having profit in your company when you are maybe not doing your best because you're dealing with a health issue and maybe you're still coming into the office, but you're not 100%, or maybe you're missing from your business for a period of time while you recover, knowing that your business is made whole, that you have that profit there is really, well, it's advantageous, right? It gives you some breathing room. On the same side, some of our business owners say, well, I want to protect my business and my house or my family. So sometimes we see business owners actually buy two policies. They have one where a check would go to the house to help with any of our house bills and obligations. And then sometimes we have dollars, they also go to the company. So you can have either or both or just one or the other.
Wonderful. So when the money comes in the corporation, let's say somebody got sick, let's say it's not me, it's somebody else.
It's somebody else.
Got critical illness claim, corporately and personally, got both the claims. The claims have not, there's nothing called coordination of benefits. They both can get it. So they got paid. The personal ones came tax-free. What happens to the corporate ones?
So the corporate dollars come in tax-free.
They come in, that's what I want to know. You've already said that it doesn't, when it has to go in the hands of them personally, then it has to go through the tax rule. But once it comes to the corp, there's no tax on that.
Right. It comes in tax-free. So then if you have those dollars in your company tax-free, and let's say you decide to pay your employee staff, right? So you're going to pay salaries. Well, then that has an offsetting expense. So it's what we call tax neutral. If as a business owner you say, well, I want some of those dollars that are in my company into my personal hands,
then it has to go through
you always pay tax when you take money out of your company.
Salary.
Absolutely. So you are actually taxed based on how you decide how to take those dollars out. But the thing that I really want to emphasize, though, is at that moment when you're dealing with a health issue, whether the money is coming to the house or coming to the business, you decide. You decide if I spend that money, how I spend that money, if I take some money out of my corporation and trigger whatever tax is appropriate. But there's the ownership, right? You've got that decision. And in that difficult time, when you're dealing with a health issue, having cash where you can make decisions is really advantageous.
And one thing I'm really understanding, something that has clicked to me after talking to you, Vanessa, is that I think business owners and self-employed professionals should have personally owned as well as corporately owned, because there are a lot of expenses in the business, just like salaries, or there are other things which will go on with the lump sum coming into the corporation. And at the same time, at home, their mortgage, their personal expenses. And because you'll have everything going on smoothly, chances for you to recover, bounce back would be faster because you're not going through another stress of lack of money.
Absolutely.
That's something really bothers everyone. So I think this is a great idea. So do you suggest the same for disability also?
I think with disability, we see typically a little bit more where we have personal ownership rather than company.
Because there's a coordination of benefits. You cannot have too much disability, right?
That's
what I want you to explain to my viewers a little bit more, because I know that people say, oh, I have disability from work. That's an employed. But somebody self-employed and is making, let's say, I would say $500,000 right now, buys $20,000 a month in case they get disabled in the corporation, and says, can I also get that personally as well? How does that work? Because critical illness can work if they are financially qualified, medically qualified at the time of the application. But what about disability? Because it has something else to do with the income as well.
Absolutely. So, big answer here. So with disability insurance or income replacement, basically what the carriers do, the insurance companies do, is they decide that there's a certain percentage of your overall net income. So for a business owner, of course, net and gross can be a very different number.
Very different, yeah.
For employees, it's not that different. That basically we say you can get a certain percentage of your money because those dollars are coming to you tax-free.
Right.
So just like I mentioned with critical illness, if we have...
Sorry to interrupt you here. You want to say it once again about the tax-free benefit of disability?
Sure.
I want, this question is asked many times. People want to know, my disability, is it going to come to me tax-free or does it come to me as an income and do I have to pay tax on it? So please talk about that personally as well as corporately.
Perfect. So I'm going to talk in general.
Because it's,
because you do always have to look at what you own personally or what is being provided you from your employer.
Yeah.
Most group plans, most individual plans, so plans that someone chooses to buy, are all tax-free.
Yeah.
So when the check comes in, when someone's dealing with that disability, they're unable to go to work because they're sick or injured.
Yeah.
We roughly as an industry issue you 2/3 of your income.
Right.
Because we know it's going to be tax-free. So 2/3 tax-free is pretty close to what we get to spend every month after the government takes their little bits and pieces. So when we're offering that 2/3, we look at 2/3 of your income on a net basis, but that's from all sources, which is just a fancy way of saying if you have more than one plan.
Right.
If you have a plan from an employer or association or even through the bank where they're covering off your mortgage payment and you're buying a personal plan, because the motivation to return to work changes,
Absolutely.
Right? So if you've got 100% of your income...
You'll never go to work.
Exactly. Especially if that was 100% of your income tax-free. We all love our jobs.
I know.
But if you were going to pay me to sit at home, I'd probably sit at home.
Yeah. So that means it's a great, great, great thing that you should have a disability policy, because if you're not working, you are at least getting the same amount which you would have had in your hands if you were working full time. So now you can work carefree. You wouldn't have to worry about if something happens to me, what's going to happen. That disability policy will give you monthly income, tax-free in your hands, which is going to be equal to what you would have made, what would you have gotten in your hands after you had worked and made the money full, right?
Can I share a quick little analogy that I think also helps people who are looking at these different structures as to how does it all work together? So if you think of a financial plan as a vehicle, right? A financial plan is a vehicle to get you there.
Yeah.
And your there is going to be different from my there. We're traveling at different speeds.
Absolutely.
So if you think of a vehicle has an accelerator, right? Yeah. And that to me is like saving for retirement. That's putting money into investments. It gets you there.
Right.
We also recommend that if you're driving a vehicle, you should have brakes.
Yes.
Brakes are for when you stop.
Yeah.
That would be life insurance coverage.
Right.
Right. Now, most of us, when we are driving and getting in our vehicles, also want some safety mechanisms.
Right.
So your disability is more like your seatbelt, right? It protects you whether you're going 2 or 200. Hopefully you're not going 200.
Yeah.
Whether or not you make a mistake that day or the weather or your vehicle fails or someone else inflicts their will upon your day.
Yeah.
And critical illness is like the airbag. The airbag goes off when there's a critical event, a major diagnosis. But most of us today wouldn't get in a vehicle that didn't have those two safety mechanisms.
Yeah.
And unfortunately, a lot of our business owners and professionals out there are driving around without any seatbelts and without any airbags. They just have the accelerator and their brakes.
Yeah.
And that's okay unless there's that hiccup where it's a health issue.
What a great analogy. What a great example that you've given, that most of the people now, everyone should actually, this is something which most can relate to, the importance of, we all know the importance of seatbelt and airbag, and the seatbelt is disability and airbag is critical illness.
Yeah.
So they're equally important to travel from one place to another. Just like in your business, you start from the beginning till the end and you protect every corner for the safe arrival at your destination. Wonderful, wonderful, wonderful. Love that. Now, I've heard you use this word, invisible employee, many times. Seriously, I don't know what does that mean.
Yeah.
My viewers don't know, but I want them to know that. This is something I want you to explain to me and my viewers in a very good details. And let's start on that.
So perfect. So the invisible employee, I think, is just a different way of looking at how critical illness could protect and help your business. So you're my business owner. So I'm going to suggest that you think about hiring an invisible employee.
Right.
Which doesn't make any sense at this point. Hopefully it will.
Makes no sense.
Yeah, exactly.
Right now.
So I'm going to start by saying what an invisible employee won't do. They're not going to show up for work.
Yeah.
They're not going to ask for the latest tech. They're not going to ask for an office with a window. They're not going to ask for time off when you want time off.
Right.
And they're never going to embarrass you in front of one of your clients or customers.
Because they're invisible.
Exactly.
Yeah.
But what that invisible employee will do is if your health is challenged with something serious, like cancer, stroke, or heart attack, Parkinson's, MS, there's a whole list.
Yeah.
Then what they're going to do is they're going to show up and create $250,000 worth of profit for your company. Now, when I talk about an invisible employee, if you have a couple of employees, we all kind of know as business owners what minimum wage is.
Right.
In Ontario right now, it's $16.50, $16.55. So if you, as a business owner, think about adding 1 hour of wage costs a day. Not for every day, but just for the 244 days that we actually work, right? So we're taking out vacations and we're taking out holidays and weekends when your staff typically doesn't work.
Right.
So sometimes our business owners look at critical illness and say, well, what if I was to hire a 1 hour invisible employee, knowing that if something ever happened to me, that my invisible employee who doesn't ask for anything and only costs me 1 hour of wage costs a day could show up and generate whatever the number is, right? 250, $500,000, $100,000 worth of coverage. And of course, depending on the age of your business owner and their smoking status and gender, that number is going to shift a little bit.
Yeah.
But it's saying, I think I meet with lots of business owners and they look at their overall expenses and they go, well, maybe I can't afford a full extra hour of wage costs a day, but maybe half an hour.
Right.
Or an extra 45 minutes. And when you think of that as a business owner and managing your business expenses, all of a sudden it puts critical illness in a different mindset. Right. All of a sudden you're like, okay, this might be really affordable for my company.
Yeah.
Because again, wage costs, as your business owner, you know what portion of your world that is. But it's just a different way of thinking about, how critical illness works to protect a business. It's like that invisible employee that hides in the corner and only steps out when they're really needed.
The time of the need.
Yeah.
So when you are paying for that, when you're already paying for the premiums of that critical illness policy for that invisible employee, are those premiums tax deductible?
Unfortunately not. CRA will not let us do that. I kind of think about it like dry cleaning, right? So dry cleaning feels like it should be a business expense because we use it for business purposes, but CRA says no, unfortunately you can't. So it's the same thing when you talk about a critical illness plan. Right? It feels protective for a business, but CRA has said, no, not today.
And same thing for disability also?
Yes, the same thing for disability.
Not about the tax side. I would like to ask about this invisible employee. That we can consider the same thing for that as well. When you can't work, this employee will create that kind of money for you and then you can live your life comfortably. Am I right?
Absolutely.
Wonderful. I wanted to talk now something about, you're from Manulife.
Yes.
Very favorite company of mine. I want you to talk about something very special that Manulife has for critical illness, which has an inbuilt product for long-term care. So, everybody's worried about the future. One day we all are going to get old and we all worry, what's going to happen? Am I going to be able to wear these heels and come to work? Or am I even going to be able to walk? Am I going to be able to do this? How can the critical illness policy help? Number one. And number two, I want to ask if my client never uses the critical illness policy ever. And let's say they've taken the policy till age 75 and they say, you know what, I don't care. Just give me the policy till the time I'm working. If they never ever use, do they have the option to get their money back? So 2 questions for you and the last 2 questions.
Yeah, absolutely.
Not the least.
I love the questions. So I think one of the things that we hear from our clients, business owners and professionals alike, is they really like the Manulife plan because it is kind of two opportunities or two coverages in one. And it's weird to say, but COVID really opened our eyes as Canadians. There was something really good that came out of COVID, which is weird to say.
Yeah, which is weird to say, but it is.
But during COVID, we as Canadians became aware of some of the shortfalls when it came to funding and protection when you need long-term care assistance.
Right.
So our plan at Manulife includes critical illness that we've been talking about, that lump sum payment if you're diagnosed with one of these things. It also automatically includes no extra cost, no extra questions. It's just there. We include long-term care as part of that package as well.
Is that only Manulife that does that?
It is. We are unique
in that.
Yeah.
So if you want to explain my viewers, what is long-term care at that time? And what is the limit for that? Let's say somebody do they have to buy a policy which is a permanent critical illness policy? Mm-hmm. How does that work?
So it's actually in all of our plans. So if a client buys term, which is renting coverage, they can rent coverage without any rate increases for 10 or 20 years, it's there. I sometimes, again, I use a lot of analogies. It's like the back seat of the car. It's automatically there. You may not think about it today because you don't need it.
Yeah.
But it's really nice to know that you have that protection just in case. So if you think about a Manulife plan, if you bought $100,000, we'll just use easy numbers.
Yeah.
You have $100,000 lump sum if you had one of those scary diagnoses.
Right.
If you didn't have one of those scary diagnoses, but you were unable to do 2 of those 6 activities that we were talking about that you did this morning, then you would be activated and you'd get 1% of that amount or $1,000 a month tax-free. And if you were in a facility...
For how long?
Well, actually, it would until the money runs out. So it would be roughly 8 years if you were getting care at home.
Okay.
If you were getting care in a facility, we double the amount to 2%. So in this case, $2,000 tax-free. And that would last roughly about 4 years before all the dollars have been paid out.
Right.
But what we hear from our clients is they like the fact that they can have one plan and 2 ways of accessing that money.
Very good.
And the nice thing too is if there was a long-term care payment, that doesn't have any CPP clawback or OAS. Or it doesn't affect your income or any of the government benefits or even what the government would provide to you for long-term care. But during COVID, we realized that there's a kind of a gap between what the government can provide for us and what we actually want for coverage.
Very good.
Yeah.
Very good. This is something amazing that they can get both. So the last part of my question, I would like you to answer also that let's say somebody bought a critical illness policy for till age 75.
Yep.
My client is 50 years old or 40 years old and they bought it in case, there's an accident and the airbag is needed. So they bought it and now nothing happened. What happens? Do they have an option?
We do. So when you decide to purchase a plan, you have an option. And it's called a premium refund option.
Return of premium on expiry.
Yes. So that's kind of an insurance language and a lot of words there. So I talk about it as a money back option.
Yeah.
Because again, let's simplify things.
Simplify, yeah.
So you can think of it as a money back option or return of capital. And really what that does is at purchase, you pay a little extra for that option.
Right.
But if you don't use your plan, then and depending on which option you choose, it could be 15 years later or 16, 17, anytime after you're 15, or it could be at age 75. If you hit that magical time where you haven't claimed, you decide that you want to cancel your plan, you cancel your plan and you get every single dollar that you've ever given Manulife back.
Wonderful. And I think for business owners, very especially when they know how to grow their business and they know how to use every dollar, this is a very good use of the dollar. If something happens, you got a lump sum. If nothing happens, all your money back. And if no critical illness happened and no, but still you got a long-term, you got to go to a long-term care facility. You can still use that 100,000. If you're home, $1,000 a month. If you're at the facility, $2,000 a month. So much to ask you. Thank you so much, Vanessa. Oh my God. There are so many questions that I have for you. And I don't know. I think I have to increase the length of my podcast because it feels like I need to ask you so much. But I want to thank you for everything. This was wonderful. We ran out of the time. And maybe in the next series, we'll have you back with a little bit more on the product-wise. But till then, thank you so much.
Wonderful. Thanks so much for having me.
Thank you. This was very helpful for my audience as well as me. And that was another episode of the Simple Wealth Wisdom Podcast. Please let us know in the comments what you like the most about this podcast, and if there is anything else you want to see or ask, I'll make sure to bring that to you in our future podcast. Watch for us again. Until next time, stay safe. I'm Gakhar. Thank you.